Good morning, everybody. This is the live market open for Wednesday, January 27th. I'm Yohay Elam of Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Today is Fed Day, and that's what we're going to talk about quite a bit. So, as usual, we're going to talk about the recent developments in markets, charts and levels the next 24 hours, and of course, your questions. If you cannot see the chat box on the screen, please go to the address here on the screen, tlk.io/fxstreet-forex-live-video. Okay, so let's start. Well, first of all, let's start with what Carney said yesterday. The governor of the Bank of England met the press met the politicians, and he had the chance to repeat what he said in the past. Last time he hit the pound very hard on its head with talk about that this is not the time to raise rates, and he repeated the same things. It didn't really have a strong move on the pound this time. Okay, we had then figures from the United States of America, HPI, which were generally better than expected. So the HPI House Price Index by Case-Shiller showed an advance of 5.8 year over year. And then more importantly, consumer confidence, the CB Consumer Confidence Conference Board, came out at 98.1% points, better than expected. Okay, one disappointment did come from, we'll bring it here on the screen, it did come from the market's flash services PMI, which deteriorated still significantly above the manufacturing one, but it's not going in the right direction, so to speak. Okay, so here we have it right here. 53.7 was disappointment, but the more important figure was consumer confidence at 98.1 points. Okay, then overnight we had figures from Australia. Most important one, of course, is the CPI, the consumer price index. So if we look at the quarter over quarter headline figure, it came out at 0.4, better than 0.3 expected. Also, the mean trimmed CPI, the core inflation as it's known in other countries, was at 0.6, better than expected as well. And also year-over-year figures were okay. Core inflation year-over-year 2.1, just like in the United States. In general, the conclusion is there's no need to cut rates in Australia anytime soon. Okay, that was the in terms of indicators. In terms of other figures, we had oil prices rising, and that supported the Canadian dollar. Let's talk about a few currency pairs, perhaps beginning from the Australian dollar this morning, because this was the most fresh figure. All right, so we had better than expected inflation. We had the kiwi, the Aussie rising above 70, and this time perhaps settling above this line. I still see resistance 70.64 followed by 71.50. Support more or less 70, then 69.50, but real support is at 68.30. So the move didn't begin with the better than expected inflation figures. It actually began with a better mood in markets yesterday. US stocks were okay. Oil prices were to the upside. This triggered a risk-on environment, and this is extended specifically for the Aussie, thanks to the better than expected inflation figures. Let's begin from the top now. Get back to the top. Why doesn't this refresh? Anyway, talking about euro dollar, which is very stable within the range. Okay, euro dollar is currently at 108.66, very much in range. 107.80 proved itself as a double bottom, as significant support, resistance at 109. High for today is 108.80. Further resistance 109.50 and 110. Significant support 107.10. Very narrow range for euro dollar. Euro dollar is reflecting the tension towards the Fed decision later today, this evening. Okay, so this means that euro dollar is very stuck. Let's see the range for today. 30 pips, very boring. Okay, but I believe this will explode later on when we have the release. We had early this morning somewhat better than expected figure from Germany, The GFK consumer sentiment, it didn't move markets at all, I would say. Didn't mention it. The pound had a nice recovery yesterday, still struggling with this level. Maybe it's better to put it right here. Okay, 143.60 is resistance. We're currently in the upper end of the range, escaped from the bottom. Yesterday we had a fall of pound dollar under 142. Okay, that's when the mood was bad after the Chinese stock market collapsed. But since then we had a recovery. Okay, so that's where we are at relatively higher ground. So this morning we have a small fall of about 20 pips, but all in all, we're at the higher end of the range. Also, the pound is waiting for data from the United States for Janet Yellen to speak up. She will not speak, she will release a statement anyway. But the pound in general is looking better than it did yesterday. The pound is in the risk camp. And on the other side of risk, we have, of course, the yen. So it's relatively higher, but didn't go too fast. Similar to the euro, it's a bit stuck. So we have weakness of the US dollar against commodity currencies in the pound, and very small strength against the euro and the yen. 118.20 is the current level. I would say 119.20 is resistance, but the ranges here are narrowing, and dollar yen is not going anywhere fast. Okay, so that's where we are right now. I would say support is at 117.30. All right. Also, the yen is waiting. The Fed. Canadian dollar, as I'll say almost every morning, is a very exciting pair of late. It had this move to the upside yesterday, all the way to 143, about 2 cents above the lows, but then it crashed once again together with oil prices, reached 140.50. Since then, it's been recovering a bit. Very nice moves in all in the Canadian dollar. It's still trading in tandem with oil. Okay. Here we are with oil prices above 30. This morning, 30.55. Yesterday, we reached once again this 32 level. Very sharp moves in oil prices in terms of percentage points. It's huge. Yesterday, when the mood dampened, we fell back under $30, 29.60, and then we're back up again. And now we're back to lower ground, but above 30 is sort of optimistic. So this is the line in the sand, if you wish, in the oil sands between okay oil prices above 30 and bad oil prices under 30. Okay, now let's continue with we talked about the Aussie, and now the kiwi. The kiwi also has a rate decision today. 64.77 is the current level. Also, it had a struggle with 65 on this improvement in the mood yesterday. 64.25 is emerging as strong support, but a bit choppiness over here. Any questions so far? Let's move to the franc, which is also quite interesting. There is a cast today. Please refresh the screen if you cannot see. Refresh if you cannot see the video. Okay. So there is a cast today, Jax, and everybody else. Looking forward to your questions. Let's continue. We talked about the kiwi. Let's talk about the Swiss franc. Swiss franc is a currency that is moving to the downside. Suspected action by the Swiss National Bank to weaken the franc. Okay, so it's weaker against the US dollar, 101.60. We already touched 102 yesterday. And this is best seen here in Euro Swiss. Look at this move. We had this line, sort of this support line that was, I think, just static. Okay, I hope the guys from FX Street can resolve this. If you cannot see, I hope everybody else can see the video. I'll continue, and hopefully you'll be able to see everything. I see a live broadcast as usual. Okay. Hope everybody else, if you see the video and can help Jax, it would be great as well. Anyway, Euro Swiss 110.40, above resistance at 110, which is of course a very round number. Actually, the highest since the Swiss National Bank removed its peg 1 year ago on January 15th, 2015, a day for the history books. So now we're above the highest levels, the highest actually in over 3 years, over 4 years since this day when they did announce the peg. Oh, sorry, last year, sorry. We have some movements. So again, it's the highest since they removed the peg on January 15th, 2015. Hope you can see the video, everybody. Okay, good morning. Anyway, 110.40, suspected intervention by the Swiss National Bank to weaken the Swiss franc, mitigating ECB action, mitigating more QE and another cut in the deposit rate. Yeah, thanks for helping out, guys. Sirik, I hope you can all see the video. Anyway, we still didn't reach the creme de la creme, the Fed preview. And we're talking about currencies, risk on mood in markets. And yeah, that's what's going on. So let's continue with Euro Pound. 75.80 is the current level. A bit lower, better mood in markets means a stronger pound, which is risk currency, and the euro is quite stable, so we're relatively in lower ground. Also here, a narrowing range. We're currently at, I think 75 is, yeah, 75 is weak support, now resistance, stronger resistance at 76.80. Okay. I have a problem. Just a second. Let's see if we can comment on the chat. Okay, see, we have some technical problems, at least for some of you. I hope to resolve everything. I'll post another link for you to try out. Okay. Oops, sorry, it's not that one. No. Okay, I hope this link works. Sorry for the technical inconvenience this morning. As I said, we still didn't reach the Fed preview, which is the most important part. So anyway, Euro Pound, which we're talking about here at 75.80, 77.40 is a very strong resistance line. It works in the past as support, and support is around 75. 74.25 is stronger support to the downside. Euro Yen, the safe haven pair, trading in tandem, very narrow ranges. Jax wants his money back. Sorry, I hope again his problems will be resolved. 128.30, 129 is the resistance, 127 is support, but we're in the higher end of the narrow range. Okay. Pound yen, what happens when we have risk on? Pound yen rises because pound is a risk currency and the yen is a safe haven. We're a bit lower today, but still 169.23. Touched 170, which works out as nice resistance. A round number and strong resistance on pound yen. If the mood dampens again, we have a lot of room also to the downside. In general, this pair has a lot of room. 163.80 is strong support, but 167 is also good support. Lots of pips to be gained, also to be lost on this pair. Further resistance at 172. Lots of round numbers in pound yen. Okay, we talked about all the currency pairs we usually talk about. Now let's move to the events for today and talk about the Fed, which is the main event undoubtedly. Okay, so at 9:30 GMT, 10:30 here in the old continent, we have from the UK the BBA mortgage approvals. Not expected to be something that really shakes the pound too much, but sometimes it does move the pound a little bit. Expecting 45.5. Okay, it's figure for December. Then we have new home sales in the United States. Usually a very important figure because every sale of a new home means significant economic activity around that, infrastructure of roads, sewer, housing, schools, hospitals, things like that. But today it's a bit less important, so we're expecting a 2% rise or a rise of an annualized level, marginal, from 490,000 to 500,000, okay? Then we have another warm-up event, the US crude oil inventories. They're expected to rise and pressure oil perhaps to the downside, relevant for the Canadian dollar, but will probably be ignored by most other currencies today because of the focus on the Federal Reserve. Okay, at 7 GMT, we have the Federal Reserve. I invite you all to join a live broadcast. I don't know who else is going to be. I'm sure Mauricio will. I think also Valeria and Dale, but I'm not sure. Anyway, we're going to analyze it live on FX Street, give you all the details, market reactions, technical lines in real time, so you're all invited. Okay, so now let's talk about what we're expecting from the Fed. Let's first of all look at this figure. This is the implied probabilities for Fed action. So for this meeting, 85%, almost 86%, no change. After the rate hike in December, no change. And this more or less tells everything about the decision itself. As we know, the Fed said it's going to move gradually. There's no press conference, no new forecasts. So we expect, yeah, the session has started. I see many of you have technical issues. So I'll ask you again to refresh. Okay, I hope this can help a bit. If it doesn't work on FX Street, you can go to the video perhaps. Sorry for the technical problems. We usually have a smooth sailing here, but you know, world isn't perfect. Anyway, talking about the Fed, we're not expecting to see any change in policy. The Fed said it's going to be gradual. It reiterates the historic rate in December. The big question is March. Okay, here we have the implied probabilities for March. After a few recent weak figures in the United States, manufacturing and retail, we have the implied probability for a change in March, for another hike in March, is much lower, 70% against the hike. Okay, so and also with the recent turbulence in markets, it also puts lowers the expectation. If we actually look when we do expect a hike, it's only more or less in June, hardly in June, more probable in July. Okay, so markets are not really expecting a rate hike. The big question is, what will the Fed hint us today about a rate hike in March? How does it see the economy? Okay, put myself on camera. We have a new lamp here. I hope the lighting is better, but it's not. So it's not straight. Okay, so we have on one hand the Fed raised rates in December, told us it's going to be gradual, warned us about inflation, but in the dot plot they told us that we're going to have no less than four rate hikes in 2016. Okay, this markets didn't believe it from the outset. Okay, not 4 rate hikes, but perhaps 2 or 3. And now will we see a hint of no hike in March, a dovish Fed because of the recent developments, or will we see a more hawkish Fed continuing the line from December? Okay, remember, just a statement. Now, I see. Let's talk about the good things in the U.S. economy and then the bad things. The good things are actually the Fed's mandates. Inflation, core inflation is at 2.1. Okay, and that's within the range. It's very good. It excludes, of course, oil and food. But also, the headline inflation is beginning to pick up because the base effects are moving away. Jobs also look great. Non-farm payrolls recently showed 292,000 jobs gained in December. Excellent figures for November and for October. jobs are moving up. Also, wages are not sort of jumping through the roof, but they've moved to a high range. I think the last one was 2.5 year over year. Okay, so the Fed's two mandates, inflation and employment, are looking good. And of course, the Fed wants to be ahead of the curve, wants to have rates at a higher level in order to be able to cut if necessary. This may sound absurd, but that's the logic they explained. And a more reasonable argument is that they don't want to keep rates too low and then have to raise rates abruptly. Okay, they made a huge preparation for December, and now they're moving rates up gradually, with markets well prepared for that. The negative things are for the future. Retail sales are still weak. The US consumption, which is the large part of the economy, is not moving so fast. Manufacturing, the sector that actually produces stuff, not only provides services like selling hamburgers or financial markets or things like that. So that also is perhaps already in a recession. Okay, manufacturing in the United States is a small part of the economy, but we don't want to see it sliding. It can pull the rest of the economy. Okay, so these are the negatives. And the big question is, what's important? What's the actual data for inflation and employment show us at the moment, which is positive? Or perhaps inflation, more importantly, employment, are lagging indicators. And because the economy is not doing so well now, GDP growth, that will have the figures for on Friday, is it actually quite poor? And later on, we'll have a fall in employment. And then the Fed should be ahead of the curve in this sense, that and not raise rates. Okay. Now, the Fed is also sensitive to markets. Wait, before I talk about markets, regarding the GDP release on Friday, it's the first release of GDP. We'll talk about that more on Friday, of course, but I'm mentioning it now because it's probably the Fed already has the figures on its table. Okay, the Fed has the figures before us. If we have a positive statement today, it could imply a good GDP figure, and if we have a bad statement, it could imply a disappointing one. Now, back to the markets. In August, we had the crash of the Chinese stock markets, which carried away other markets. We've seen a repeat of that more or less in recent weeks. Now, the Fed reacted to that by hinting that it will not hurry to raise rates. And indeed, in September, tightening financial conditions, China, were the reasons for not raising rates, for delaying it. So the Fed is also sensitive about stocks. That could be another reason to tell us that they're not going to raise rates in March. Now, so we have one reason not to raise rates in March is stock markets. The other is the weakness of the US economy. And this matters a lot. If the Fed gives us a hint that it's going to take a hiatus, not raise rates any in March, going to hint something like that, the reason matters. If it's because of financial markets, it's not so bad. It means it sees a bright picture, or relatively bright picture, of the US economy, and raising rates is a positive picture of the US economy, and they're just worried a bit about stock markets. It's just a small delay, but things are looking good. Okay, that's a good reason. I mean, that's good for markets. Why? Because we know that we will learn that the Fed supports markets, well, once again, and we will learn that the US economy is doing well. So it's also good news. In this case, my scenario is that we'll have dovish because of markets, is positive for commodity currencies, positive for oil, and perhaps negative for the euro and the yen. So even though the Fed hints about a delay in rate hikes, it could be sort of a risk-on atmosphere, and the dollar could actually gain against the euro and the yen, or at least not fall too much. But if we have worries about the US economy, talking about a worse outcome than expected for GDP, hints about that. This is maybe a better light, right? And if we learn that the US economy cannot pull the global economy forward, then we have a much more dark scenario. Okay, in this case, the US dollar could weaken against the euro and the yen because they are at the risk, sort of the safe haven currencies, and strengthen against commodity currencies, the pound, oil. Stocks could fall because in this picture, the Fed would seem a bit lost. We would begin thinking the Fed doesn't know what it's doing, that it raised rates too early. Okay, that would be sort of admitting failure. Okay, so these are two dovish scenarios, but which are very different. Other scenarios that we have here is that the Fed sticks to its guns fully, goes hawkish, says everything is great, hints actually about raising rates in March. Okay, continuing with the 4 rate hikes, that means once every 2 meetings, once every other meeting, preferably a meeting with a press conference, a hike in March. That could be bullish for the US dollar across the board, against the euro, against the yen, against commodity currencies. King dollar, US economy is doing well, and we're going to raise rates. All is good, dollar is king. This scenario has a very, very low probability, but I'm mentioning it because you can never know. And my last scenario, fourth and last one, is a more confusing one, okay? That the Fed makes a huge effort to balance all the things. Want to say on one hand, we're doing well, on the other hand, not so. We're going to wait and see. It's going to be gradual. Inflation is okay. Employment is better. We're worried about this, happy about that. Trying to make it as balanced as possible, as much as possible on one hand, on the other hand. And they might succeed at first, okay? They might get markets confused. Fed speak is very complicated. I guess you will see in this case markets wobbling just a bit. But eventually this situation of balance will not stay because there's lots of tension built into the Fed decision. And I cannot see this being maintained for too long, okay? So eventually I believe that in this scenario, after an hour or two of choppy markets, we'll find one way or another to interpret that. And we could, of course, go to the dovish side. Markets could, analysts such as John Hilsenrath at the Wall Street Journal, Stephen Beckner at MNI, they could say, okay, the Fed tried to do its balancing act, but actually what it's telling us is this or that. And in this case, I believe the scenario could be more dovish because of the US economy, which could lead to a stronger safe haven currencies, the euro and the yen, a resumption of the bigger trend that we've seen in the past weeks, which has seen a nice correction in the past week, but in the past month or so, that means a stronger euro and yen, safe haven flows, stronger US dollar against commodity currencies. Okay, so to sum up, no change is expected in policy. We are looking for hints towards March. If it's a dovish hint because of markets, it's good news. Stronger dollar against commodity currencies, weaker. It's good for markets. Weaker dollar against commodity currencies, the risk assets, but stronger dollar against the safe haven, the euro and the yen. If we have worries, dovish because of the US economy, it's good for the euro and the yen, bad for commodity currencies. If we have a very hawkish Fed telling us it's going to raise rates, no doves at all, it's good for the dollar across the board. And if we have a confusing message, then eventually I think we'll go to the safe haven flows, to a stronger euro and yen, and weaker commodity currencies, but it'll take time for markets to react. Another thing about the reaction, as always with Fed decisions, it's released at 7 GMT, 2 p.m. Eastern time in the 2 p.m. Eastern time in the United States. We have an initial reaction, of course, in the immediate release, but these are not very liquid hours. These are hours which are okay. The US session is open, but it's alone. Then we have a second reaction in Tokyo and the full reaction in the European morning when everybody had time to digest, all the analysis pieces are out, and liquidity and volume are high. Okay, so that's when we'll have the full reaction. Okay, enough about the Fed. I don't see too many questions here. I guess you still have technical problems. I'll continue talking. It's going to be recorded anyway. and we'll talk about other events that we have today. So after the Fed, actually just 1 hour after the Fed, we're moving to New Zealand. We have double feature there. Also here, most important event is the rate decision. In New Zealand, we're not expecting a change in rates. They cut the rates last time to 2.5%, which was also the previous low in rates. They cut rates quite a few times until 2.5%. Then they raised rates up to 3.5% and began cutting once again. So they gave us a hint last time that rates have reached, at least for now, they're going to be stable for some time. On the other hand, we had weak inflation figures from New Zealand, raising speculation of a cut. No cut is expected. If we have a cut, the Kiwi dollar is going to crash. Most probably no cut today, but a hint about the future. Because of weak inflation, because of worries about China, because of 2 consecutive falls in milk prices, perhaps we'll have some kind of shift to the dovish side. On the other hand, the Kiwi dollar is not so strong, and that allows more breathing space for the RBNZ. I do expect them to talk down the Kiwi, even though they're not going to move on the rates. So I expect a dovish hold. Okay, but of course the movements in Kiwi dollar will also depend a lot on what happened beforehand in the Fed decision. In addition, we have from New Zealand the trade balance. This could be ignored because of the rate decisions in the United States and in New Zealand, but still worth noting. At 10 to midnight GMT, we have Japanese retail sales. Remember, the yen moves more on safe haven flows than on anything else. Okay, so that's it for the events for today. Do you have any questions? We'll talk about a few more events this week. I guess some of you are still having technical problems and used to getting lots more questions. Okay, let's talk about the events that we had so far this week and what we're expecting later on. Monday, we had German IFO business climate. Worse than expected. Draghi didn't say anything new. Carney didn't say anything new. Consumer confidence in the United States was better than expected. Today we had Australian CPI, better than expected. Oil inventories, the weekly circus, which has become more important. The Fed decision about which the main event for the week, talked about that in detail. The RBNZ decision. Tomorrow we have UK GDP. After the show, we'll talk about that tomorrow. Durables goods orders. Also, the Fed might also have that figure. And on Friday, we have a strong finish to the week with the Bank of Japan. Will they or won't they introduce more QE? US GDP, very important, and also Canadian GDP. See here a question. What is hope on oil? Well, oil prices reflect two things. Basic economics, supply and demand. So yesterday we heard some talk that we might maybe have some cooperation between OPEC and non-OPEC members on cutting demand. That means when we talk about OPEC, there is only Saudi Arabia that matters because it's a huge producer and the only one that's capable to be the swing producer. The rest want to produce as much as possible and they want others to cut. Okay, well, also Saudi Arabia wants others to cut, but it's the most important player. It actually ignored what other participants in OPEC wanted last year in 2014. Russia is also a huge producer, and contrary to its predictions about its poor infrastructure, it continued producing a lot of oil. If we have some kind of cooperation between Saudi Arabia and Russia, we could have a fall in oil prices. But these countries are on opposing sides in the Syrian civil war, so that's not so easy. Okay, if we do have some kind of cooperation, there's also, of course, Norway, Canada, the United States shale industry, which is producing less but still showing resilience. If we have less supply, we could have oil prices rise. Rising oil prices would help not only the countries that depend most on oil, like Saudi Arabia, Venezuela, Russia, Nigeria, but would also help the US economy just a bit, because there are also lots of jobs in the US mining, fracking, shale industry, so that would be a bit positive. More importantly, for oil, it's not only supply, it's also demand. So if we have reports on more demand, either because of low prices or because India continues growing at a rapid pace, faster than China, and consumes more oil, it's also positive. It means it's not only good news for oil, it's also good news for the global economy, because the global economy, it shows that there is more demand in the global economy. Okay, so I hope this answers the question. For the Canadian dollar, oil is critical. It's the main mover. We do see movements because of, for example, Canadian jobs report. We have GDP on Friday, and of course the Bank of Canada has a lot of impact, but most of the day-to-day moves are just dependent on oil prices. Stronger oil this morning. Well, not one-to-one, but in general, you can see the correlation. You can see that oil has recovered. This big fall in the Canadian dollar CAD reflects the rise here in oil prices. Okay. Also, can you type the link for FX Street where you watching this analysis? I think it's the one I already put out, but let me try this out once again. Try this out once again. Okay, I hope you could see that. Oh, that was my voice going back in feedback anyway. Okay, so that's what's going on with oil. Let's take another look at euro dollar. Very, very stable in range, very much awaiting the Fed decision. A bit sliding now in range, but I could not call it a big move. Hot pairs beside euro dollar today. Well, I would say dollar CAD because of crude oil inventories. Let's see, we have here resistance at 141.70, further resistance 143.10, and 144.40 support. I can put it here at 140.50, and then of course the round number of 140. And the kiwi dollar, because we have also a rate decision in New Zealand, but it could be quite messy. And this pair is recently a bit more choppy than beforehand. So if we have the Fed going dovish and RBNZ hawkish or not dovish, then we could see a big rise. And if the Fed goes, well, talks about supporting markets, is worried about the global economy, and in New Zealand, they're giving us a hint about a cut. It can go down. It could be quite messy. It means we could have a lot of action here, but not necessarily ending the day or moving clearly in one direction, but more crazy up and down moves. Okay? So that's what's going on today in markets. Any more questions? This is again the list of main events for today. Question here, do you think the pound will be quiet after the big move? No, I think the pound will keep on moving. It has shown its ability to move. I don't know to which direction. I would say that the BBA mortgage approvals is not what will move the pound. The pound moves on safe haven flows. Safe haven flows push it down, and risk on atmosphere pushes it up. Okay, so, and the biggest moves are against the yen, and then the euro, and then the dollar. Okay, why against the yen? Not only because the figures here are larger, but because the yen is the number one, the king of safe haven currencies, and the pound is in the risk camp. Okay, so if you have the Fed showing optimism about the global economy, we could have stronger pound, weaker yen, big move to the upside. If the Fed is worried about the global economy, we could have the yen strengthening, the pound weakening. Okay. Good morning, everybody. I'm sorry again for the technical problems. Hopefully this will not happen again. I know it happened in the past, but it didn't happen too much. Usually we have a smooth sailing. Anyway, so the pound is a significant mover also against the dollar. Currently, we're more in a wait and see mode towards the Fed. Okay. All right, I guess it's time for the wrap up for today, and we'll of course repeat scenarios for the Fed. This is the wrap up for the live market open for January 27th. It's Wednesday and it's Fed day. Before we talk about the Fed, let's see what we had yesterday. Nothing new from Mark Carney of the Bank of England. Good figures from the United States, mostly. HPI, the Case-Shiller Home Price Index rose more than expected. Consumer confidence rose more than expected. And only markets flash services PMI disappointed. Also in Australia, we had good news from the CPI, rising more than expected, basically eliminating a chance of rate cut next week from Australia. And we had, in general, the most important thing is the mood. Okay, the mood is positive, more positive than negative. Yesterday in the morning, we had a negative mood because of the crash in Chinese stocks, but then things improved. Oil prices were on the rise, also oil related, but also the mood improved in stocks. And we've seen commodity currencies strengthen. So it's the Aussie here rising on better CPI and a better mood. 70, 65, 71, 50 are resistance lines. 70, 69, 50, and 68, 30 are support lines. The kiwi awaiting great decision in New Zealand and in the US under 65, 65.80 resistance, 64.25 support. Rising to the top, very narrow range in euro dollar. During this session, during the last hour, during the show, it's a bit lower, but very much stuck in range. Awaiting the Fed, 107.80 support, 109 resistance, followed by 110, 110.70 on the downside, 107.80, 107.10. The other safe haven, the dollar yen, is a bit higher than yesterday, 118.26, but not as high as it was earlier in the week when the mood was much better. Or sorry, earlier or on Friday. Still uncertainties about BOJ action. Okay, pound dollar in the higher end of the recent range, 143.33 at the moment, 143.60, I would say 70 is resistance. Support, significant support at 140.125 and 140.50. Okay, dollar CAD moving with oil prices, 141.22. It went to lower lows yesterday on this rally. In oil prices, 140.87. No, 140.50 I would say is support. 141.70 is resistance. And 144.40 is strong resistance. Okay, so we talked about the major currencies. And now let's talk about the events for today. There's one event that looms over all the rest. It's of course the Fed, but before that we have BBA mortgage approvals in in the UK. New home sales probably be ignored despite its importance. Crude oil inventories is significant for the Canadian dollar. They're expected to rise a lot. And then at 7 GMT, the Fed decision. Let's run again on the main scenarios for the Fed. The Fed is not expected to raise rates or move at all, but we're expecting some kind of hint about what's going on in March. The Fed will try to keep things as balanced as possible, not say anything. Keep all the options open. They probably will acknowledge some weakness in markets and some weakness in the US economy, but some things in the US economy are doing better. The Fed's mandates, jobs, and inflation. If the Fed go dovish, there are two separate dovish scenarios. One is that it's sensitive about markets, about the US dollar, about China. Sort of waiting for a calmer environment until the next hike. That will be positive for stock markets, positive for oil, positive for commodity currencies and the pound, Aussie dollar, Aussie, Kiwi, CAD, and the pound, and negative for safe haven currencies, the euro and the yen, because it tells us that everything is okay with the US economy, and they're only worried about markets and everything is cool. But if they're dovish because of the US economy, because of falls in manufacturing, retail sales, and they have the GDP figures and they're probably going to be not so good in front of their eyes, then we have a different scenario. Then the US economy cannot lead the world forward. A resumption of the risk-off atmosphere, risk aversion, stronger euro, stronger yen, weaker commodity currencies, weaker pound. Okay, these are the main scenarios. An extreme scenario would be that they're hawkish and hinting about a rate hike in March. Very improbable. If this happens, a stronger dollar across the board. And also a scenario with, well, I would say still with probabilities, is that they do their best to find a balance. That means markets will be stable for an hour or 2 hours until analysts try to understand what the Fed tried to say or decide what the Fed said. I mean, and also they eventually, I believe this will turn into a resumption of the risk-off atmosphere, stronger yen, stronger euro, weaker, all the rest. A few things to remember: initial reaction at the release at 7 GMT, then at the Tokyo start, then the full reaction in the European session. Other things to watch out for: voting members. It's the first decision in 2016. We have new voting members on the Fed. So we might have dissenters, perhaps to the hawkish side. The composition is a bit more hawkish. Yellen still has the last word, and her number 2 and number 3 are more dovish. But this could also be a factor, the dissenters, okay? Small factor. And another factor, just analysts to watch out for. First and foremost, John Hilsenrath of the Wall Street Journal. Second in line, Steve Beckner of MNI. But of course, things that people say on Bloomberg TV and CNBC everywhere will also have an impact. Why did analysts have a bigger impact? Because the Fed makes blurry messages. Okay. Hopefully we'll get something a bit more clear from the Fed, and we can understand markets more easily, but the Fed does not want that. It wants to leave all the doors open. Okay, and now after the Fed, we have the RBNZ decision. No cut is expected, but they could go dovish because of recent weakness in inflation figures, hinting that they could cut rates later in the year. And we have also trade balance from New Zealand and Japanese retail sales to close the day. This is the Fed decision is the most important event, but it's not the end of this busy week. We also have more important figures tomorrow and a strong finish on Friday. Okay, so that's it for today. Thank you very much, everybody. Thank you very much, Sirik. I see you speak some Hebrew. Toda rabba chaver, which means thank you very much, my friend. I'll also remind you that the voting on FX Street's Best Awards 2016 continues. Forex Crunch is nominated. I will thank you if you vote for me or participate in general, and even not vote for me, because there are really great nominees out there. Voting ends by the end of the week, before the end of the week. So do participate and check out the nominees pages. Okay, so that's it for today. Thank you very much, everybody, for coming. Sorry for the technical issues. I thought we would have a better technical day because I have a new lamp here. But anyway, hopefully everything will be smooth as it usually is tomorrow. Well, thank you very much for voting for me. And thank you very much, everybody, for coming to the show every morning. Looking forward to your questions tomorrow as well. So I wish everybody a safe and successful trading day, and see you tomorrow. Thank you, and bye-bye.